Good morning, friends. Online friends, please respond. Am I audible? Online, please respond. Am I audible? Yeah, I'm doing good. I'm doing good. And how about you? Are you all well? Kalai Vanakkam, Vanakkam Shakti. Happy morning, good morning. Good to know, Ismail. Good morning, good morning. Yeah. So, friends, yesterday we completed rent-free accommodation, right? Valuation of rent-free accommodation. That's what the last topic we have completed yesterday. And today we have a few more perquisites pending. We have a motor car and other things pending today. So listen, before moving on to that, hope you remember, yesterday we have categorized perquisites into three. Which are the three category of perquisites we had? Do you remember? We have categorized perquisites into three yesterday. Which were the three category of perquisites? Fully exempted perquisites, fully taxable perquisites, and perquisites not partly. There is nothing called partly, okay? Perquisites taxable only in the hands of specified employees. These were the three splits that we were discussing yesterday, okay? So it was fully taxable, fully exempted, and perquisites taxable only in the hands of specified employees. Now let's understand what exactly is the specified employee. So we'll discuss what is specified employee and we'll move on. So listen, friends. Specified employee simply means department say any of these three categories, if an employee satisfies any of these three conditions, not all, any of these three conditions, then that employee is called as what? A specified employee. And we'll make use of the specified employee thing whenever we discuss the other perquisite valuations as well. So tell me, meaning of specified employee. Who's the first one under the specified employee category? Director employee. If you are a director employee of a company, you will be always considered as a specified employee. So you tell me, are all the directors employees of a company? Can you call all the directors as employees of the company? No. Whole-time directors, managing directors, etc. are normally the employees of a particular company. Independent director, alternate director, nominee director, etc. will not become the employees of a particular company. So what we can say is, if you are a director as well as an employee of a company, then we can say, if you are a director employee of a company, then we can say that you are a specified employee. Yeah. Moving on to the second category of specified employee. What is that? An employee who have substantial interest in a company. What do you mean by this substantial interest? Substantial interest in respect of a company. Excellent. In respect of a company, say for example, if I am a shareholder of a company holding 20% or more share capital. Okay. Yes. Excellent. Yes, Sharon. If I am a shareholder of a company holding 20% or more share capital of a particular company, then I am said to have substantial interest in a company. If I have a substantial interest in a company and I am the employee of that particular company, then department will treat me as what? Specified employee. Are you all with me? So two things. Number one, director employees. Number two, an employee as well as a shareholder who have 20% or more share capital. That is what is called as an employee who have substantial interest in a company. Now moving on, employee drawing in excess of 50,000 per annum, not per month. If you are an employee who have a taxable salary of how much? 50,000 in a year, you will be considered as a specified employee. That means, technically speaking, practically speaking, all of them are specified employee. It's annual salary, not monthly salary, okay? Per annum. If you're drawing a salary of 50,000 per annum, according to the income tax law, then again you will be considered as a specified employee. So practically we don't have to split them into specified and non-specified because 99% of the employees will be specified only, okay? But for the purpose of solving a question, you should know what is specified and what is non-specified. So three of the types of employees are normally called as what? Specified employees. You tell me which all are the three types? Director employee, employee having substantial interest, and employee drawing a salary of in excess of 50,000. Now we will understand what is the relevance of the specified employee definition. Okay, when we move on with the after deduction of 16(1)(a) or not, after deduction, yes, there is a definition for this salary, but you don't have to study that particular definition for the examination purpose. Okay, it is after deduction of 16(1)(a). Yes. So the point is, listen. Say what we are saying is why we are using this specified employee thing, that you will understand when we move on to the next perquisite valuation. So moving on to the next perquisite valuation, that is valuation of motor car. Are you all listening? Are you all listening? Let's understand how to value or how to do the valuation of a motor car. So motor car, you can see we have two set of charts, okay? Okay, 1 second. Oh my God, started automatic update. Okay. Just give me a second. Friends, give me a second. I accidentally click on the update, okay? Give me a second, friends. Accidentally, instead of cancelling, I clicked on that update thing. Okay, Aditya, what's your doubt? No. Right now, we can claim 61 deduction. Say, for example, standard deduction, you can claim for both old as well as new. Okay, it's a new amendment. Under 115 BAC, you can claim the standard deduction, not the entertainment allowance and professional tax. You cannot. I have a doubt in LTC. Let's say a husband and wife both working in different companies go on a journey together and both their employees pay the travel ticket amount in advance. It is possible for the wife to get the money for both the tickets of her husband and herself for the boss, and the husband to get the ticket of both the wife and himself for his boss. Normally, you should not do that, okay? For one expenditure, only one deduction, that's it. No, you cannot do that. One expenditure, one deduction only. That is the right way. Gift given by employer to the employee and employee is deriving benefit out of it. Will it also be? No. That benefit out of that gift will be taxable in the hands of employee, not under salary, okay? Depends upon the benefit, head also varies, that's it. It is possible to commit fraud of it and get away with it. Yes. If you are thinking in that manner, yeah. You can say it as a fraud, not fraud, it is not moral, okay? Yes, because it will be very difficult for the department to identify that you are husband and wife and all. So it will be a kind of an impossible task. Yeah, that's not the right way basically. I told you that you have to discuss it with the team. Okay, KSA team, they will make the arrangements. It's not me who's gonna share, and talk to the team. They will make the arrangements. Okay. You didn't get that chart yet. Online friends, you didn't get that chart yet. Chart means this revision notes yet. What's the status of this? Okay, so please ask them. They will make the arrangements, okay? Have you called or texted them? Have you called? Yeah, so please, I too will do a follow-up. So during the break time, please ask them. They will make the arrangements, yes? Yeah. So coming back to the point, friends, where were we? We were discussing motor car. We haven't started motor car. So we were about to start. At that time only, accidentally, I clicked on the update. Yeah, it's updated, but I cannot see any changes, okay? It's the whole same thing. Maybe some minor updates. Yeah. So no response. Okay, don't worry. I'll have a word with them. Yeah. Okay. During the break time, let me have a word with them. All right. So let's continue, friends. We were discussing about motor car. Now let's value motor car, friends. See, listen. What they are saying is, if an employer is giving a motor car to the employee, are you all listening? If an employer is giving a motor car to the employee, see, this motor car is not given, it's just like, it's not transferring the ownership of the motor car. They are not transferring the ownership. Rather, what the employer does is, the employer gives this motor car to the employee and the employee can use it. Use it for his official purpose, personal purpose, and he can mix up official purposes as well as personal purpose. In such a case, what exactly are the benefits enjoyed by the employee? How do you value the benefit enjoyed by the employee? That's what we are about to discuss. Are you all with me? So let's understand what all are the possibilities. So we have made a chart in a way that it covers all the possibilities. Okay, all our charts are made in a way that it covers all the permutations and combinations. So let's see. So the first possibility here, what we say is when car is owned by the employee. So in the first possibility, the employee have a car and all the running and maintenance charges are met by the, say, either employer or the employee. So these are the possibilities. Possibility number 2, when the car is owned or hired by the employer and the maintenance and running charges are met by either employee or the employer. So these are the 4 permutation and combination that we are about to discuss. So we'll start with the first one. So can you read the first point? Where car is owned by the employee and maintenance and running expenses are met by the employee and the car is used either for official purpose, either for personal purpose or for official as well as personal purpose, not a taxable perquisite. Why not a taxable perquisite? My car, my running and maintenance expenses. I am not getting any benefit from anyone. Yes or no? Say I am an employee of a company. I have a car and I am maintaining the particular car. I am fueling the car. I am repairing the car. I am doing everything in relation to the car. Am I getting any benefit? No, I am spending for my own purposes. Whether I use it for official purpose, whether I use it for personal purpose, whether I mix it up, doesn't make any difference. Are you all with me? Now, possibility number 2 is car is owned by the employee and maintenance and running charges are met by the employer. Then there will be a difference. Maintenance and running expenses are met by or reimbursed by the employer and the car is used, say for official purpose. I have a car, the car's maintenance and running charges met by the employer and I'm using that car for what purpose? Official purpose. Then you tell me how much will be the taxable perquisite? Nothing taxable, because if I'm using that car for official purpose, I'm not getting any personal benefit. If I'm not getting any personal benefit, nothing shall be taxable as perquisite. Are you with me? Are you with me? So the point is very simple. I have a car and that car is completely sponsored by my employer. That means the running and maintenance charges are completely sponsored by my employer and I'm using that particular car for what purpose only? Official purpose only. Then I'm not getting any personal benefit and hence nothing shall be taxable as perquisite. This is what the department says. Moving on to the next case. Can you read the next case? Car's maintenance and running charges are met by the employer and the car is used for private purpose. Private means what purpose? Personal purpose. Now you imagine, I have a car. I'm using exclusively it for personal purpose. Are you all listening? I'm exclusively using that car for what purpose? Personal purpose. So, same sir only taken class yesterday and today. You want someone else, Chandrika? Come on. Yes, sir. It is better you get out, okay? Rather than staying over here. It's better you get out from the live. That will be better. Yes. So, coming back to the point, don't post such kind of comments, okay? It's rather you quit from the class. Now, listen. For official purpose, so for private purpose, if you are using the particular car, so you are owning a particular car and the car is completely sponsored by whom? Car is completely sponsored by employer. Then let's understand. So, to me, that's only I replied. Come on. Who's this girl? All right. So, let's understand for private purpose, actual expenses incurred by the employer is taxable in the hands of all the employees. So what they are saying is, I'm owning a car and that car is completely sponsored by whom? The employer. Okay, the employer takes care of all the running and maintenance charges. So you tell me, I'm using that particular car for only what purpose? Personal purpose. If I'm using that particular car only for personal purpose, you tell me what is the benefit that I'm getting? The full maintenance running charges is met by my employer, and I'm using that particular car for my personal purpose, and I'm getting that, and I don't have to incur any running and maintenance charges. That entire running and maintenance charges will be the taxable value of perquisite. It is common sense only. Are you with me? So what they are saying is, when you value perquisite, they say actual expenses incurred by the employer is taxable in the hands of all employees. This will be taxable in the hands of all type of employees. That's what the department says. Are you all with me? So you don't have to buy hard this thing, okay? It's actually common sense. I have a car. My car is completely sponsored by my employer, and I'm using that particular car only for personal purpose. Then the entire sponsored amount shall be my taxable value of perquisite, because it is a benefit that I'm getting due to my employer-employee relationship. Now, moving on to the next one, friends. I own a car, and the car's maintenance and running charges are met by whom? Employer. And the car is partly for official and partly for private. I'm using it for official as well as private purpose. I'm mixing that particular car. Okay. So, if you are mixing that particular car, then there is a practical difficulty. You tell me, say, some journey is personal and some other journey is official. So is it practical to note down the kilometer of each journey and maintain a register? It is possible, but not practical. It's possible because whenever you start a journey, you note down the kilometer, and when you come back, you note down the kilometer. But nobody lives like that. Are you with me? It is possible, but not practical. Department also know that. Okay. Because most of the employees will say that everything for official only. Because assessing officer cannot come and check whether you are going for official journey or personal journey. So department, what they have come up with, an equation. Rather than finding the actual value of perquisite, department say, we will give you an equation. You apply that equation. Whatever figure comes in as a result, you use that figure as your taxable perquisite value. Rather than bifurcating. Or if you want to maintain separate records, you can do that. Are you with me? Say, for example, you are such a disciplined employee. Okay, whenever you travel, you note down every travel and all. If you leave like that, no problem. So, what department recommends is, rather than maintaining or noting down all the kilometers driven, it is better to give you some equation. And that's what we are about to discuss. So, if the car is owned by the employee, and maintenance and running charges met by the employer, and the car is mixed up for official as well as personal purpose, then first you need to check the cubic capacity of the engine of that particular car. Are you all listening? If the cubic capacity of engine is less than or equal to 1.6 liters. What is this 1.6 liters? Have you seen this, say, Innova 2.5 liter or 3 liter engine? So 1600 cc, that's what 1.6 is. 2 liter, 2000 cc. 3 liter, 3000 cc. You find out the cubic capacity of the car. Normally a budgeted car's cubic capacity will be less. Okay, if it is a luxury or ultra luxury, then the cubic capacity will be more. So it depends upon the cubic capacity of the car, we will decide how to value the perquisite. Are you all listening? Are you all listening? Now, if cubic capacity of engine is less than or equal to 1.6 liters, that is 1600 cc, then let's understand how to value the perquisite. Say, actual expenditure incurred by the employer. So, you note down the total actual expenditure incurred by employer. You note that down. Then you deduct what? 1800 per month. You deduct what? 1800 per month. Say you use that particular car for 12 months. Then 12 months into 1800 per month. You deduct. Whatever the remaining value comes in shall be the taxable value of perquisite. So what department say? You note down the actual running and maintenance expenditure initially. Then you deduct how much? 1,800 rupees from the actual running and maintenance charges. Whatever remaining, if something comes up, if there is any balance, that balance shall be your taxable value of perquisite. Are you with me? They provides a statutory equation rather than telling the employee to note down all the kilometer, which is not practical. So what they are saying is use this equation and find out the taxable value of perquisite. Are you all with me? Are you all with me? So that's what the department say. Now, friends, listen. They are saying one more thing. If chauffeur is provided, then you can deduct another 900 rupees. What is chauffeur? Driver. If the employer is giving you a driver as well, and you are using that particular car for official as well as personal purpose, then what you need to do is you can deduct an extra 900. That means along with the 1,800 per month, if driver is also provided, you can deduct another 900 per month into 12 months. If you use that car for 12 months, then the remaining, if any, you deduct these two, and the remaining, if any, shall be the taxable value of perquisite. Are you all with me? Are you all with me? So what the department says is, you note down the actual expenditure, then you deduct 1,800 per month. If driver is also provided, then deduct 900 per month. Then the value remaining shall be the taxable value of perquisite. Are you all with me? Are you all with me? And this will be taxable in the hands of all type of employees. That's what the department say. Now this equation or this statutory value is there only if you are what employee? Sorry, only if the car's cubic capacity is what? Less than or equal to 1.6 liter, or we can say 1,600 cc. Say Maruti Swift will be around 1.2 liters, if I'm not wrong. 1.2 or something will be the cubic capacity of the car. Then Hyundai Creta. Creta have two versions, 1.5 liter version and 2 liter version is there, if I'm not wrong. I don't know. It is 1.5 liter, if I'm not wrong. You are teach super. Motivation also. Thank you. Sir, the thing she meant is someone asked her, so she replied that Sir talking maybe the okay, leave it. Now, so the point is, you should first of all understand this is a public chat, okay? So this is not for your personal chats and all. This platform is there to you to ask your doubts to me, and I'll reply, okay? So you should have a conscious what to say where, okay? So that is another important thing that you should learn in your life. Certain situation have to be, there are certain purpose for a certain platform. Always use that according to the purpose. Okay. Yeah. So coming back to that particular point, if cubic capacity of that particular car is less than or equal to 1.6 liters, that means 1,600 cc, then you need to value the perquisite like this. Now moving on to the next one. What if the cubic capacity of the car is more than 1.6 liters? Yes. Sir, will they mention the cubic capacity in the question? Of course, yes. Of course, yes. No need to worry about that. Okay, they will always mention the cubic capacity of the car. Otherwise, you need to by heart all the cubic capacity of all the cars which is available in India. That is not possible. Okay, yeah. So definitely they will give. Don't worry. So friends, listen. What if the cubic capacity of the car is more than 1.6 liters? Then how do you value the perquisite? Very simple. You write down the actual expenditure. Then instead of 1,800, you deduct 2,400. Instead of 1,800 per month, you deduct what? 2,400. There also, if driver is also provided, you can deduct another 900 per month. For driver, it is always 900. Whether the car's cubic capacity is more than 1.6 or less than 1.6. If there is a driver, then always 900 per month. Are you with me? Are you with me? So point is very clear, friends. So the alternative we were discussing, if the car owned by the employee and maintenance running charges met by the employer and the car is used for personal purpose, then how do you value? The entire maintenance and running charges met by the employer shall be fully taxable. If the car is mixed for official as well as personal purpose, then how do you value? You go find out the cubic capacity of the car. That will be there in your examination. If the cubic capacity of the car is 1.6 or less, then how do you evaluate? Very simple. You note down or write the actual running and maintenance charges met by the employer. If driver is there, including the driver's salary, you have to note down. Then you deduct 1,800 per month. If there is driver, an additional 900 per month. If the cubic capacity of the car is less than or equal to 1.6 liters. And what if the cubic capacity of the car is more than 1.6 liters? You deduct 2,400 per month. If driver is also provided, then you deduct additional 900 per month. The remaining value, if any, shall be the taxable value of perquisite. What if there is no remaining value? Nothing shall be taxable. Are you with me? Are you with me? If there is no remaining value, then nothing shall be taxable. This is what the department say. And one more thing is there. Car owned by me, running and maintenance charges met by me, then nothing shall be taxable irrespective of my usage of the car. If I'm using a particular car exclusively for official purpose, again, nothing shall be taxable because I'm not getting any personal benefit. Are you with me? Are you with me? Say, imagine I'm an employee of KS Academy and I'm making use of this particular video camera for taking classes. Is it a personal benefit? No, because I'm making use of this camera for what? Official purpose. So nothing shall be taxable in my hands. Are you with me? Good. So moving on to the second possibility or second alternative. What is the second alternative? Car owned by or hired by the employer. Car either owned by or hired by the employer. So let's understand what will we do? In case negative answer means adjust to the other income. No. Negative answer means nil. Nothing shall be taxable. Okay. It's not an expenditure. We are valuing the perquisite. So when you value a perquisite, if the answer is negative, that means you don't have to tax anything. It is nil. It's not an expenditure. Okay. All right. So moving on. Okay, sir, the thing meant someone asked, what is this again? Old one? Okay, yeah. So, listen, where were we? The car is owned by or hired by the employer and the maintenance and running charges are met by the employer. So, listen, I don't have a car. I'm the employee, okay? I'm the employee. I don't have a car. My employer have given me a car. And he himself sponsors the entire running and maintenance charges. I don't have to incur anything. I'll get a car and he himself sponsors all the running and maintenance charges. Now you tell me, if the car is used for official purpose, nothing shall be taxable as perquisite. Why? Because I'm not getting any personal benefit. Now you tell me, if the car is used for personal purpose, that means private purpose only, then you tell me, I'm getting two benefits. What are the two benefits? First of all, I don't have to own a car. Second one, that car's running and maintenance charges is fully free for me. So I'm getting dual benefit, both ownership as well as running and maintenance charges. Are you all listening? Are you all listening? I'm getting dual benefit. One, I don't have to own a car. Number two, all the running and maintenance charges are taken care by my employer. Now let's understand how do you value the perquisite. So listen, in such a case, what department says the actual expenses including driver salary you have to consider as your taxable perquisite because that entire car is free for me. Are you all with me? The actual expenditure, and if there is driver, you have to include driver's salary as well. That will be fully taxable in my hands, provided I'm using that car for what purpose? What purpose? Private purpose. Private purpose means what purpose? Personal purpose. Okay. Yes. Can the employee also claim depreciation? No. You cannot claim depreciation. Only the owner of the car can claim depreciation. That too under PGBP, not from salary and all. Okay. You cannot claim any depreciation from salary. So coming back to the point, for private purpose of the employee, if you are using that car, then you take the actual expense including the driver's salary plus 10% per annum of the cost of the car to the employer or higher charges taxable in the hands of the specified employees. For the time being, forget about this specified employee. Okay. For that, I'll give you a tip. How to remember whether it is taxable in the hands of specified employee or normal employee. That I can give you a tip after this. For the time being, forget about that specified employee. Now listen. If the car is owned by the employer and maintenance charges are met by the employer, I've told you that I'm getting dual benefit. What are the benefit? First of all, I don't have to incur any running and maintenance charges. For that entire running and maintenance charges met by my employer shall be fully taxable value of perquisite in my hands. That was the first part. Along with that, we should value the proportion of ownership of the car as well. Yes or no? We should value something for the ownership of the car as well. So what department says, along with that, add what? 10% per annum of the cost of the car to the employer. That simply means, say for example, employer have given me a car valuing 10 lakh rupees and running and maintenance charges met by the employer is say 70,000 rupees a year. Okay, 70,000 rupees a year. Then how do you value the taxable value of perquisite? Very simple. How much is the cost of the car? How much is the cost of the car? 10 lakhs. First of all, you take the entire cost, then apply 10% for a year. So for the ownership, you have to show 1 lakh rupees as value of perquisite. Plus that entire running and maintenance charges of 70,000 also will be taxable. And in total, it will be 1,70,000. Are you with me? This shall be the taxable value of perquisite. Are you all with me? Are you all with me? So what the department says is, if you are using a car which is owned by your employer and all the maintenance or running charges are met by the employer and you are using that particular car only for your personal purpose, then for the ownership, 10% of the cost of the car every year. And what if I'm using the car only for 6 months? Then 1 lakh into 6 by 12, that will be 50,000. Are you with me? Now, for a year, it will be 10% of the cost of the car for the ownership. Plus, you tell me, one more thing will come. The actual running and maintenance charges met by my employer, if there is driver, including driver salary, also have to be taxable perquisite in my hands. Are you all with me? Are you all with me? Excellent. Moving on with the next point. Sir, not clear in example. What is their cost of the car for the employer? 10 lakh. For a year, you read this, 10% per annum of the cost of the car to the employer have to be the taxable value of perquisite for the ownership. So 10 lakh into 10%, it will be 1 lakh value. Then running and maintenance charges met by the employer is 70,000. That anyways will be your taxable perquisite. So altogether it will be 1,70,000. No. If it is hired, that you tell me. If it is hired, then it will be the higher charges. Don't apply 10%. That's why we have written or higher charges. What does that mean? Every year, employer takes a car on rent. Oh, these are actually very simple things, okay? Every year, employer takes a car on rent. And the rental payment given by the employer is say 60,000. And the car is used by the employee for his personal purpose. Then you tell me what will be the taxable value of perquisite? What will be the taxable value of perquisite? Full 60,000 if the car is taken on rent and the annual rent paid by the employer is 60,000 and the car is given to the employee and the employer is using that car for the whole year, then that entire higher charges paid by the employer shall be the taxable value of perquisite in the hands of employee. Don't apply 10% and all. Are you with me? All right. Hope you understood, okay? Yeah, great. Now moving on to the next one, friends. Moving on to the next one. What is that? So we were discussing the car exclusively used for personal purpose. Now what is the third one? Partly for official and partly for private. That means you are mixing it up. You are mixing it up. Then what to do? Again equation. Again statutory equation, because it will be very difficult to bifurcate in other manner. So what they are saying is, if you are partly using it for official purpose and partly using it for private purpose, then how do you bifurcate? Very simple. If the CC of the engine does not exceed 1.6 liters. What is CC? Cubic capacity. That means 1600 CC. That also means 1.6 or less, or 1600 cc or less. In that case, how do you value? What they are saying here is you take 1800 per month as the taxable value of perquisite. In the last chart, what we have seen is you write down the actual expenditure, then deduct 1800. Yes or no? Here what they are saying, if the car is owned by the employer and maintenance charges read by the employer, and the car is used by the employee for private as well as official purpose, then how do you value? Don't deduct anything and all. You take 1800 rupees per month as the taxable value of perquisite. If the car's cubic capacity is less than or equal to 1.6. And if the driver, you can take additional 900. That simply means I have a car, a Swift car owned by my employer, given to me for official as well as personal purpose. Then how do you value perquisite? 1800 into 12 months. And there is driver also. Then 900 into 12 months. And can you help me? How much will be my total value of perquisite? 21,600. Is it 21,600 total? No. Add these two and tell me. How much is 1800 into 12? Total is 32,400. So 1800 into 12 plus 900 into 12, it will be 32,400, and that will be the taxable value of perquisite. Yes. That if only chauffeur is provided. Chauffeur means what? Driver. Now, so listen, moving on to the next one. What if the cubic capacity of the car is more than 1.6 liters? You tell me, what is the cubic capacity of the car is more than 1.6 liters? Then instead of 1800, it will be 2400. So for 12 months, if you used 2400 into 12, plus driver is also there, 900 into 12. That's it. Depends upon the cubic capacity, the value changes. If it is less than or equal to 1.6 liter, then 1800. If it is more than 1.6 liters, then 2400. Yes. Moving on to the next one. So what was this part of the chart? That is car owned by the employer. Maintenance and running charges met by employer. That's what we have learned till now. Now moving on to the second part of it. And what is the second part? Car owned by the employer himself, but running and maintenance charges are met by the employee. Running and maintenance charges are met by whom, friends? Employee. Now let's understand how do you value the perquisite over here. So let's see how to value the perquisite. That is, if it is used for official purpose, then you tell me how much is the perquisite? Not at all a perquisite. Why? Because you are using it for your official purpose and nothing shall be perquisite. Nothing shall be taxable. Now, if it is used for private purpose, don't look at the chart. Even without looking at the chart, you can tell me. What is the benefit that you are getting? Car owned by the employer. Running and maintenance charges met by myself. Then what is the only one benefit that I'm getting? I don't have to own a car. You tell me, how do you value the ownership? 10% of the original cost to the employer shall be the value. If the car is taken on hire, higher charges paid by the employer will be the taxable in the hands of employee. Are you with me? Only the ownership you are required to value, because running and maintenance charges are met by yourself and you don't have to value that. Are you with me? So moving on to the next one. What is the third one? If the car is used for partly official and partly personal, you are mixing up the car used for partly for official as well as partly for personal. Then you tell me, how do you value the perquisite? If CC of the car does not exceed 1.6 liters, then how do you value the perquisite? Instead of 1800, 2400 and all, you apply 600 per month will be the taxable value of perquisite. And what if there is driver? 900 per month if chauffeur is provided is taxable in the hands of specified employees. As I've told you, for the time being, forget about specified and non-specified. Okay, yeah. So because we have I'll give you a easy way to remember whether it is specified or non-specified. Yeah. So what they are saying is, if the car's cubic capacity does not exceed 1.6, the car is owned by the employer. maintenance running charges met by the employee himself. In that case, how do you value the perk? Very simple. 600 per month. What if there is driver also? Additional 900 per month into how many months you used. That's it. What if the cubic capacity of the car is more than 1.6? What if it is more than 1.6? Instead of 600, add 900 per month. And what if there is driver? One more 900 per month. Are you with me? So 900 into 12 for the car, and for the driver if there, 900 into 12, another 900. Provided the driver's salary met by the employer. Here what we have learned is maintenance and running charges met by the employee. If the driver's salary is also met by the employee, then add nothing. Are you with me? Are you with me? If the driver's salary alone is met by the employer, then only that driver's thing, okay, will come into the picture. I hope it is clear. All right. So this is how you value the thing. And there is one important note here. Can you read this note, friends? While valuing taxable perquisite, see, as we have seen yesterday, from the rent-free accommodation also, we have deducted the amount recovered from the employee. Here also, you have to deduct that. But don't deduct any recoveries from the employee when you are using statutory figures. Why? Because in statutory figure, we are only saying to tax something. So from that, you are not supposed to deduct anything more. Are you with me? Are you with me? So normally, except where the statutory figures are used, you can deduct the recoveries from the employees from the value of perquisite. But if you are using statutory figures, don't deduct anything. I'll give you another simple question to make you understand, because this is being a lengthier chart. I'll give you a question for a better understanding. So don't worry. So let's solve a question, okay? So can you go through this question number 16, question 16? Just solve this question and you'll get a complete idea on whatever we have discussed right now. For private purpose, in case the car is rent, so rent charge plus expenses paid by the employer. Yes, that's right. Then in case of non-specified employee, then no taxable, yes. So specified and non-specified, there are certain specialities that I'll tell you, okay, don't worry. These provisions itself is only for specified employee. Yes, the second chart is applicable only for specified employee. Sir, please show the chart once. Okay. I'll show it because we are doing the question. So give me 2 minutes. I'll show it to you. Okay. Yeah, very good. I'm getting answers. Excellent. Others also, please give me the answer. Ready with the answer? All right, so let's solve it together, friends. Sonam has been provided a car of 1.7 liter by his employer, Vikash Limited. The cost of the car to the employer was 3,50,000. So employer have expended how much for the car? 3,50,000 for the car. And the maintenance cost incurred by the employer is 30,000 per annum. So the employer himself is maintaining the car. So you tell me which is the alternative? Car owned by employer. And you tell me maintenance and charges, running charges met by employer. All right. So we have to make use of that second flow chart to solve this answer. Now, is there a driver? Yes. Chauffeur's salary paid by the employer 3,000 per month. So chauffeur means driver. Then find the value of perquisite for Sonam for assessment year 24-25 if the car is used for, number 1, office purpose. You tell me how much is the taxable value of perquisite? Not taxable. Why? Because official purpose means nothing shall be taxable. What if it is used for personal purpose? If it is used for personal purpose, you have to add the dual benefit. Number 1 for the ownership. How much is the ownership value? 3,50,000 into 10%. So 3,50,000 into, I'll write here, okay, in the note. So car, second case, that is B. So 3,50,000 is the total cost of the car into 10%, and that will be 35,000 rupees. And how about running and maintenance charges? How much is the running and maintenance charges? They are saying 30,000 per annum. Okay, so the running and maintenance charges become 30,000 per annum. And how much is driver's salary? 3,000 per month into 12 months, and that will be how much? 36,000. And altogether, how much will be the total value? 1,01,000. Not yet over, and there is a note under that. And how much is that? What they are saying in the note? In case of B and C, the employee is being charged 15,000 per annum for such facility. So there is a recovery from the employee. You tell me what to do with the recovery. Except where statutory figures comes into the picture, you can always deduct the recovery. But if the statutory figure or the statutory equation you are using to value the perquisite, don't deduct any recovery from the employee. Do you remember this? Do you remember this? So what we need to know is we can deduct that recovery from employee. And how much is that? 15,000. So you deduct that, and how much will be the taxable? Taxable perquisite will be 86,000 in option number B. Now, how about option C? What they are saying in option C, let's see. Option C, both purpose. What is both purpose? Official as well as personal. If it is official as well as personal, then you tell me how to deal with it. Car is owned by the employer. Maintenance and running charges met by the employer. Car's capacity is 1.7. Car is mixed for official as well as personal. You tell me what is the statutory value to be used. It is 2,400 per month into 12 months. Is there driver? Yes. So additional 900 per month into 12 months. Can you help me? What is the total? 39,600. Now the question is, can you deduct that recovery from the employee? No, you cannot deduct recovery from the employee because we are using statutory figures for the valuation. Are you with me? Are you with me? So imagine, see, why you are there saying don't deduct anything from the statutory value? Why? Because imagine, see, actual running and maintenance charges met by the employer is how much? Around 66,000. Out of that, we are only saying tax 39,600. From that, again, don't deduct any recovery. Are you with me? Are you with me? That's why whenever we are using statutory figures, don't deduct any recoveries from the employee. Yes. Is there is a statutory limit in C? Yes. This is the limit. This is how you have to compute. 2,400 and 900 if there is driver. I hope it is clear. Yeah. So somebody asked me to show the chart. Which chart you want? The first one or second one? Portion C, why we are taking driver salary at 900. That is the statutory equation, okay? If there is driver, you have to add 900 per month. That's why. Second chart, okay. Yeah, this is the second chart. Full chart, oh, I cannot display full chart in one page. It will be, it will be like this if I display full chart in one page. So it's a kind of a task. Okay. Yeah. So moving on, friends, listen. Shh. Yeah. So moving on to the next perk valuation. So I am not valuing all the perquisites. Okay. I have only selected important perquisites because as you all know, within 4 days, otherwise I have to stick on to 1 or 2 chapters. I don't feel that will be very useful for you because if that question comes from that chapter, you will get something. Rather than that, if I select the important topics from different chapters, then the possibility of, the things which we are actually discussing in this 4 days, definitely it will come. Because we are discussing most of the things, not everything, most of the things. Are you with me? So definitely something will definitely come in the examination, that's for sure. Now, so friends, answer. This is the answer. So the next perk valuation that we are about to discuss, and what is the next perquisite valuation that we are discussing? That is valuation of, which is the next one? Concessional education. Okay. Before that, I'll tell you that about that specified employees. Okay. Listen. I'll tell you about the specified employees. Can you go to chart number 1, first chart? Car is owned by whom in the first chart? Car is owned by whom? Employee. Okay, car is owned by the employee. Then the taxability in the hands of all employees. Wherever you take, you can see that. All employees is there. Are you with me? Are you with me? Now, when you come to the second chart, the taxability is only with the specified employee. Are you all here? So, in the second chart, car is owned by the employer. Car is owned by the employer. So, what is the tip to remember this? In all the perk valuation, we can use this tip. And what is the tip? Very simple. I'll tell you a story. Okay. Say, for example, I'm an employee. Are you all with me? I am an employee and I have something. I have what? Something. I told my employer, sir, please give me, sir. I don't have money to maintain this something. Okay. I don't have money to maintain this asset. Please give me something. I've given a request to my employer. Are you all listening? I am an employee and I have some assets. I've given a request to my employer that, sir, please give me something. I don't have money to maintain this asset. The employer, out of his love and affection, have given me some money to maintain the asset. The employer has given what? Some money to maintain the asset. In that case, that money that I get will be taxable perquisite in whether I am a specified employee or not specified employee. So if I am requesting and getting some benefit, I own an asset and I'm getting some benefit for the maintenance of that asset which I own, then it will be taxable whether I'm a specified employee or not specified employee. Chart 1. Car owned by me. Running and maintenance charges met by the employer. It will be taxable whether I'm specified or not specified because I asked them for the benefit. Are you with me? Are you with me? Option number 2. Car owned by the employer. He told me you use it. Okay. He told me to use it. Don't worry, you use it. Then it will be taxable only if I am specified employee. If employer's asset is given to the employee and he's saying you use it, in that case, it will be taxable only if I am a specified employee. Are you all with me? Are you all with me? So this is how you have to, this story will actually help you. Wherever we go, wherever that specified employee reference comes in, you can use this. I have something, I requested for the money and I'm getting it, that will be taxable whether I'm specified or not specified. The employer had something, he has given me this and he told me to use it, then it will be taxable only if I am a specified employee. Are you with me? Are you with me? This will help you to understand what exactly is the specified employee and non-specified employee thing. Okay. So moving on, friends. Yeah, I hope you got the answer. Okay. Yes. Moving on to the next one. So we are about to discuss the next valuation. And what is the next valuation? Can you read the heading? Valuation of free or concessional educational facilities. So let's understand what exactly is this one. Okay, this is a little bit important. I mean, all the things which we are discussing are important. Okay, all the things which we are discussing here is important because I have only selected important things. Yes. So what is the first one? If school fees of the children of the employee or any member of employee's household is paid or reimbursed by the employer on employee's behalf, it will be perquisite in the hands of all employees. Are you all with me? And what does this perquisite? What do you mean by this perquisite? Very simple. Say employees' children or their member, like a younger brother or younger sister or someone is studying in some school or college, and that school fees or college fees, whatever it is reimbursed by the employer, then that is an added benefit given to the employee because it is the employee who have to suffer that fees. Yes or no? See, your children's study expenditure should be taken from your pocket. Your employer is giving that. That means you are getting a benefit. That benefit have to be taxable as what? Perquisite. Are you with me? Are you with me? So that's what the department say. If school fees of children of the employee or any member of employee's household is paid or reimbursed by the employer on employee's behalf, it will be perquisite in the hands of all employees. Is that clear? You don't require any equation or valuation methodology here because whatever the school fees suffered by the employer shall be the taxable perquisite in the hands of employee. There is nothing technical here. It is only common sense. Moving on. If the educational facility is provided in a school maintained by the employer or in a school by a reason of being employment at free of cost or at concessional rate. What does that mean? Employer have a school. In that school, employees' children will get free education. Are you with me? Are you with me? Employer have a school. Okay. Or employer is the owner or sponsor of a particular school. Employee's children or member of household is getting what? Free education. He don't need to pay anything. Or he need to pay only concessional amount. In that case, it will be perquisite only if you are a specified employee. The same story. Owned by the employer. Given it to the employee. The other one, I taken an admission for my children in some other school and I asked for the fees. It will be taxable in the hands of all employees. Second one, employer have the school. Okay, he told me, come, you join your children here, our school. I joined them. Then it will be taxable only if I am a specified employee. In the car also it is like that. Are you all listening? Superb. So this is what they say. So friends, listen. The benefit or the perquisite, what they are saying is, if the employee's children or any other member of his household is studying in a school which is owned by the employer, then the perk valuation have to be done only if you are a specified employee. Practically, we have to value in the hands of all the employees. Why? Because all the employees are specified employees. But in examination, they may give employees are non-specified employee or employees are specified employee. That bifurcation they may. Normally they don't, but they may. Okay. If they give that, you have to be careful. Remember the story. Owned by the employer, given it to the employee. You don't have to, otherwise it will be very confusing. You'll get mad, which all are taxable in the hands of specified employee, which all are not taxable in the hands of specified employee. All those things will ruin you. Not required. Remember the story, that is more than enough. So coming back to the point, friends. Now, how do you value this? How do you value this? Let's see. Can you read the heading? Value of benefit to the employee resulting from provision of free or concessional educational facility shall be determined as follows. Let's understand number one. Free education to the children in the school maintained by the employer or education sponsored by the employer. Listen. Free education. Read that. Free education to children in the school maintained by the employer or education sponsored by the employer. Employer have a school and free education is provided to the employee's children. In that case, how do you value the perquisite? The cost of education in a similar institution in the near locality. Any amount collected from the employee shall be reduced. So that simply means the normal market value of the school fees. If that school have some other students also, you check the market value of the school fees from that fees itself. Okay. Or if that school is exclusively for the children of employee, that is also possible. Company like Tata and all in Jamshedpur, they are doing this. Okay, they are doing this. They have schools, sports academy exclusively for that Tata Steel company employees. Are you with me? In that case, you check the similar fees in the locality. A school like that, how do they charge? That fees shall be, we'll say market value of the fees. That shall be the taxable value of perquisite in the hands of employees. And any amount recovered from the employee, you can definitely deduct as well. Are you with me? Are you with me? Now, friends, there is a benefit here. What is the benefit? If school owned by the employer and the cost of education per child is 1,000 or less per month, then not taxable. This is a wonderful benefit given by the income tax department. What are they saying? Read that again. If school owned by the employer and the cost of education per child is less than or equal to 1,000, then not taxable, then nothing taxable. That simply means, say for example, I own a school. You all are my employees. Okay, you all are my employees and I own a school. Your children are studying in this school. This is the school. Your children are studying in this school. Per month, the school is only charging 900 rupees. Per month from an outside student. Per month from an outside student, the school is only charging how much? 900 rupees or exact 1,000 rupees. No worries. Children are studying free here. No problem. Nothing shall be taxable perquisite. So that's what the department say. If the per month value of that education is less than or equal to 1,000, employees, don't worry. Nothing shall be taxable in your hands as perquisites. Are you with me? Are you with me? Now let me ask you one doubt. What if the school fees per month is 1,100? What if the school fees is 1,100? How much will be the taxable perquisite? Fully or excess? Fully or excess? There is a problem in that. If you read Income Tax Act, it's a little bit confusing. It's not clear whether it is fully or excess. So whenever institute comes up with an answer, they always give alternate answers. Assuming fully taxable or assuming excess taxable. Are you with me? There is always a confusion. If you read Income Tax Act, it's not clear. Normally in salary and all, nobody will file a case and all for this. So it is an unsettled case. So what you can do, what we do normally is, when we file a return, we only show the excess. Because we interpret everything in favor of our client. Are you with me? If a position is not clear, when we can interpret it in our own, yes, that is permissible. Beneficial construction. We can say, we can do that. No problem. It's permitted only. So in examination, you don't have to write both. You can stick on to one. Either you can say fully taxable or that excess 100 only taxable. You can say that. Are you with me? Are you with me? Yes. If exceed 1500 fully taxable. Yeah. Depends upon the view that you take. Okay. Both are possible. Yes. Both are possible. Depends upon the view. You can take either fully taxable or excess taxable. It's up to you. Now, moving on to the next one, friends. But there is one problem. This benefit will be given only if employees' children studies. If employees' brother or sister studies in a school owned by the employer and the per month fees is less than 1000, fully taxable because this 1000 rupee benefit will be given only to whom? Only to whom? Children. There is no limit for the number of children. Okay, there is no limit here for the number of children. They are only saying child without any limit. Are you with me? That is for per child it is 1000. If 2 children are studying, then 1000. Per child, limit is 1000. Not all together. Are you with me? Are you with me? Now, friends, listen. Where educational facility is provided to any other member of his household in an educational institution owned by the employer or in other institution. They say, for example, some other school, your children are studying in some other school and the employer sponsors that expenditure. Then what will happen? Cost of such education in similar institution in nearby locality minus amount collected from the employee. Note the benefit of 1000 is not available. So listen, you tell me, when will you get the benefit of 1000? When will you get the benefit of 1000? 2 things. First of all, the school have to be owned by the employer. Second one, your children should study in that school. And one more thing we can say, that cost per month should be less than or equal to 1000. If it is more than, again take one view, either excess taxable or fully taxable. Are you with me? If your brother or sister is studying in a school owned by the employer, then fully taxable, no benefit if it is less than or equal to or more than 1000. Is that point clear? Yeah. So listen, friends, this is how you have to deal with the perquisite valuation in relation to the education. Are you all with me? Online friends, are you all with me? Please respond. The online. Yes, superb. Great. All right, friends. So let's move on. Only after completing perquisites, now I'll give you a question. Okay, only after completing perquisites only, I'll give you a question because we don't have much perquisites now. We have few more. After finishing all the perquisites, I'll give you a lengthy question that has lot of perquisites. Okay. Yes. So moving on to the next one, can you read the heading, friends? Interest-free or concessional loan provided to the employee or any member of his household. What do you mean by interest-free or concessional loan? Imagine, say I'm taking a loan from SBI. I'm taking a loan from SBI. They will charge at least 10%. 10 to 12% they may charge as interest. Yes or no? Yes or no? I'm taking a loan from my employer and the employer is not charging anything. Am I getting any benefit? I'm taking a loan and I'll repay that loan. Okay, I'll repay that loan, but there is no interest. So I'm getting a benefit. I don't have to pay any interest for the loan given by my employer. That interest component shall be taxable perquisite. And we are about to discuss how to value that interest component. Are you all listening? So interest-free or concessional loan. What is concessional loan? SBI interest rate is 10%. My employer is only charging 2%. Then how much is my concessional percentage? 8%. Are you with me? My employer is charging only 2%. My SBI rate is 10%. Then the concession that I'm getting is 8%. Now imagine, SBI is charging 10% and the employer is charging 12%. Then how much is my concession? Nothing. All right. If that rate charged by the employer is more than the SBI rates, then don't add anything. That's it. Are you all here? Are you all here? Yes. So let's understand how do you value the perquisite in this case. So can you read the first part of the column? What is that? Interest charged by employer. more than or equal to SBI rate. Not taxable, not a perquisite because you are not getting any benefit. Are you with me? Now, interest charged is lower than SBI rate. Then it is treated as a perquisite, and interest at SBI rates on maximum outstanding balance less interest paid by the employee on that loan. Simply means, say for example, I took a loan of 10 lakh rupees. SBI rate was 10%. Employer charged only 2%. What is the benefit that I'm getting? 8% on the capital balance. Are you with me? Are you with me? So interest at SBI rate on maximum outstanding balance less interest paid by employee on that loan. Are you all here? And there is a note under this. Can you read note number 1? Interest charged from employee shall be reduced from the above determined value. That's what we have done. We have already deducted that particular value. Only 8% will be the concession that I'm getting. Then what is note number 2? Above perquisite is computed on aggregate outstanding balance for each loan as on the last day of each month. Can you read that note again? That's what I'm about to say, Ragul. Don't worry. Okay, that's what this note is. Read this again. Above perquisite is computed on aggregate outstanding balance for each loan as on the last day of each month. There is a problem when you repay loan. What is the problem? Not a problem. How do you repay a loan? We call it as EMI, equal monthly installments. So the amount that you're repaying will be fixed, but that principal and interest component varies. Are you with me? Are you with me? Let me create a circumstance. Okay, let me create a circumstance and let's analyze how do you practically or how do you compute it for examination. Practically as well as an examination, you have to compute in this manner, which I am about to show in this example. Okay, so I have no plans to repeat that example because it is going to be a very lengthy example. So I want all of you to be super attentive right now. Are you all here? Are you all here? Say for example, I took a loan. Okay, I took a loan from my employer. I took a loan from my employer and the interest, it's an interest-free loan. Okay, interest-free loan. He is not charging any interest. SBI rate in the market is say 10%. SBI charges for a similar loan, and what is the market rate? 10%. Always the standard is SBI interest rate. When you value this, that will be given in the question. Okay, they will definitely provide that in the question. The SBI standard rate is how much, friends? 10%. So employer provided me a loan, and say friends, in this loan, every 5th of a month, every 5th of a particular month, I have to repay 20,000 rupees to the principal. This loan is structured in a way that every 5th of a month, I have to pay how much? I have to pay how much? 20,000 rupees to the principal. Forget about the interest amount. Every month, 5th, I am supposed to pay 20% to the principal. That simply means, say for example, say this year starts from 1/4/2023. On 1/4/2023, opening balance of that particular loan is 10 lakh. Opening balance of that particular loan is how much, friends? 10 lakh. Are you with me? Are you with me? On 5th of April, 2023, how much will I pay to the principal? 20,000. And how much is the balance on 30th April? On 30th April 23, how much will be my balance? 9,80,000 will be my balance. Are you with me? Are you with me? Every month end, on the outstanding balance, you have to apply the concessional rate to value the perquisite, because every month there is a principal repayment happening. Are you with me? If the examination question says that every month there is a principal repayment happening, then on every month outstanding value, you have to, every month and outstanding value, you have to compute the interest concession to value the perquisite. Let's go back to that particular note again. Can you read this note again? Above perquisite is computed on aggregate outstanding balance for each loan as on the last day of each month. So for April month's concession, how do you value? Your outstanding balance is 9,80,000 into, what is the rate of interest? 10% into 1 by 12. Why 1 by 12? 10% is for a year. Here outstanding balance is for a month. So you need to compute the concession for a month. Are you with me? Can you help me with the math? 8,167. You round it off. Okay, it's 166.66. You round it off to 167. Yes. Then, listen. On 5th of May 23, there will be another repayment of 20,000 to the principal. Yes or no? So you tell me how much is the balance of principal on 31st May? 9,60,000 into 10% into 1 by 12. Can you help me with the math? Exactly 8,000. Then next, on 5th of June 23, there will be another repayment of 20,000 to the principal, and on 30th June 23, how much is the balance? 9,40,000 into 10% into 1 by 12. Can you help me with the math? 7,833. Now, next one. On 5th of July, there will be another principal repayment of 20,000, and the balance will be how much? 9,20,000 into 10% into 1 by 12, and how much will be the amount? 667. Likewise, now I hope you got an idea. Likewise, on this is 31st July, right? On 31st August, what will be the outstanding balance? 9 lakh into 10% into 1 by 12. How much will be the value? 7,500. Now, if you check this, there is a series. It's actually a series. Every month, 1,333 is the difference happening. Are you with me? All right, forget it. No, let's not complicate it, okay? On 30th September, 8,80,000 into 10% into 1 by 12. And how much is the amount? 7,333. Then on 31st October, 8,60,000 into 10% into 1 by 12. How much will be the advantage? 7,167. Then on 30th November, 8,40,000 into 10% into 1 by 12. 7,000. So moving on to 31st December, 820 into 10% into 1 by 12. 6,833. Then it will be 6667. It's actually series, okay? Yeah. So on 31st January, it will be 8 lakh into 10% into 1 by 12. And how much will be that figure? 6667. On 29th Feb, it will be 7,80,000 into 10% into 1 by 12. And how much will be that? Come again? 6,500. And on 31st March, it will be 7,60,000 into 10% into 1 by 12. It will be 6,333. 3. Now, can you take the total value of all the concessions that you got? You need to take the total value of all the concession. Total taxable perquisite for the year. $87,000 is the total taxable perquisite for the whole year. This is how you have to compute if there is a monthly repayment. Are you with me? Are you with me? Ragul, I hope you understood because you were asking about the EMI. Yeah, 167, yes. It's not 1,000, 167 from every value. It's a progression basically. It's a kind of a series. It follows that trend. Okay. Instead of writing this much, you can do that. Instead of writing this much, you can do that. It shows 167 from every value and you can compute it accordingly, no problem. It's not required that you have to write it in full. Only for making you understand the logic, I've written it in full. Otherwise, after 5 minutes, you will say, sir, how does this 87,000 came? Can you explain? That will come. To avoid that only, I've written everything. Okay. Have you all understood what I've written? So, friends, the point is, if there is monthly repayment in the question, always make sure that you have done the answer. You don't have to write this much, okay? But you have to consider for every month. Because every month your balance changes. If the balance changes every month, interest also changes. Exactly. Is that clear? Excellent. Moving on, friends, we were discussing concessional rate. And there's an exception to this particular perquisite valuation. And let's understand what exactly is that exception. Can you read that exception box? Exception to the above perquisite. However, there is no value would be charged in the following cases. So in the following 2 cases, you don't have to value the perquisite. Are you all listening? Are you all listening? In the following 2 circumstances, nothing shall be taxable. What is the first circumstance? If such loans are made available for medical treatment in respect of prescribed diseases like cancer, tuber, etc. So you don't have money. Say you are the employee of a company and you don't have money. You had some prescribed disease. For the treatment also you don't have any money. So you asked your employer and the employer have given you a loan. And he said, don't pay any interest, but you have to give me back the principal. Then you make use of that particular loan. Will the income tax department come up with a perquisite valuation? No. No. Because the employee will definitely curse department in that case. Okay. I don't have money. I'm struggling with my health. You want me to pay the taxes for the perquisite? No. Nothing. Okay. To avoid that, it's a kind of anticipatory bail. We have no plans to tax such interest if it is taken for a medical treatment of a prescribed diseases. Are you with me? Are you with me? And what is the second case? Where the amount of loan are not exceeding in aggregate 20,000. So you have taken a loan of rupees 10,000. Okay. After 2-3 months, you will repay it back. For that and all, don't value any per. If the loan amount is 20,000 or less, don't value any perquisite. That's what the department says. Are you all with me? Is that point clear? So, 2 circumstances don't value any perquisite. Number 1, if it is for the medical treatment of a prescribed disease. And number 2, if the loan amount is 20,000 or less. That interest. Principal amount, no. Only the interest you will get ATE, not from the employer. Yes, from the employer, if you are paying some interest, that interest portion that if actually paid, you will get it as a deduction under ATE. Not principal. E only covers interest. Home loan principal repayment will come, that is 80C. Home loan, yes, principal repayment you can claim, 80C. Yeah, what if I'm taking 20,000 this month, 20,000 next month? That's what they have written aggregate. They know you will do things like this, okay? Then the next month end, your total loan is 40,000. Definitely, all the interest will be taxable. Don't worry. Yes. Sir, 20,000 mean principal. Okay, amount of loan, that means principal. Yes. Who called me? Nobody. என்னடா டவுட் கேளு. அது 24B தான். ஆமா, செல்ஃப் ஆக்குபைட் ப்ராப்பர்ட்டி இருக்கணும். 24B லெட் அவுட் ப்ராப்பர்ட்டினாலும் 24B கிடைக்கும். புரிஞ்சுதா? பிரின்சிபல்னா அது வந்து 80C. இன்ட்ரெஸ்ட் ஐம் டாக்கிங் அபவுட் ஹோம் லோன். இன்ட்ரெஸ்ட் போர்ஷன் தான் 24B கிடைக்கும். ஓகே தான்? எஸ். Moving on to the next one, friends. Can you read the next heading? Free or concessional food and non-alcoholic beverages. So the employer is giving either free or concessional food or non-alcoholic beverages. So what to do? Let's understand how to value the perquisite. And there is something more. 20,000 for other purpose, 20 for any other purpose, it doesn't matter, okay? Yes, you have to aggregate everything. So, free or concessional food or non-alcoholic beverages, let's understand how to value the perquisite. Listen. Can you read the first box in that? Can you read the first box? Tea, snacks and other non-alcoholic beverages in the form of light refreshment provided during the office hours, including overtime. Nothing taxable. Say for example, in between the employer provides some tea and some vadai. No problem, have it. Nothing shall be taxable. Are you with me? Due to fear, employee saying, no, I don't want vada and tea. Okay, perquisite will come. No, don't worry. You have all the vada and tea, no problem. There won't be any perk valuation, but it should be light refreshment. Okay, 2 chicken biryani may be light for you, but not for the department. Okay, so it should be a light refreshment. Now, not taxable. Now, how about the second one? Can you read the second box? Free meals provided during office hours. That is in the remote area or in an offshore installation. There is actually a small alignment error. It should be the next item. Okay, next bulleted point. What is remote area? Say for example, you are working in Chennai. Our company is in Chennai and I've sent you to Kodaikanal. Okay, for some project work. So Kodaikanal is a kind of a rural area. I don't know. It's a hill station and comparatively it's a rural area, right? Imagine it's a rural area. Okay. Imagine it's a Attipatti. I'm sending you to Attipatti. No problem. I'm sending you to Attipatti. Okay. Attipatti, I think there are no hotels. Nothing is there. Okay. It's a kind of a barren land. We have a new project in Attipatti. So I send you to Attipatti. And in Attipatti, I'm providing you all the food. All the three times food and all. Nothing shall be perquisite because you don't have any other choice. You don't have any other available hotels or something. So to a remote area, if I'm sending you and providing the food, then no problem. Nothing shall be taxable. And in an offshore installation, what is offshore? What is onshore? India. What is offshore? Outside India, including the sea. Offshore means not in our land. It is outside. Maybe sea or maybe Dubai or maybe Europe, whatever it is. Offshore. Are you with me? It's not necessary that it have to be in sea. Sea also is included. So offshore installation. So our work is outside India. Okay, outside the landmass. No problem. No problem. If I give you 3 times food, nothing shall be perquisite. Are you with me? Are you with me? But you are getting a benefit. You don't have to spend anything for the food. But this is not a rare case. This is due to the, you don't have any other option. That's why. Remote area and offshore installation. If I provide any office, food in the office hours, no problem. Nothing shall be taxable. Now, moving on to the next one. What is the third case? Free meals provided by the employer during office hours, at office or business premises, or through paid vouchers which are transferable and usable only at eating joints. Say for example, in a normal case, you are working in Chennai. Say this is an IT company and you all are the techies. Okay, I'm giving you free food at lunch. Lunch is free for you. Are you with me? Lunch is totally free for you. Either I myself will provide the lunch or I'm giving you some coupon like a meal pass. Have you seen meal passes? Certain companies will give. Sodexo is a company which is famous for giving meal passes. You can use that meal pass whichever restaurant which accept that meal pass, you can give that meal pass instead of money. Are you with me? Either I'm giving you the meal or I'm giving you some vouchers. In that case, how much is the taxable perquisite? Expenditure on free meal in excess of 50 per meal shall be taxable perquisite to the extent of excess amount in the hands of all employees. Here there is no confusion. Say if that one meal that I'm providing you cost 75 rupees. How much will be the taxable perquisite? 25 rupees will be the taxable perquisite. Are you with me? That means 50 rupee per meal. No tax. Over and above that, excess only shall be taxable in the hands of all employees. Are you with me? Are you with me? First of all, will you get a meal for 50 rupees in Chennai? Is it possible anywhere in Chennai will you get? I think some kind of Amma canteen is there, right? Is there some Amma canteen there? How much? What is the cost for 10 rupees? 5 rupees only. Oh, super. Come again? 1 idli, 1 rupee. 1 idli, 1 rupee. Oh, sure. Who funds that? State government. Wonderful. So, is there a lot of Amma canteens in Tamil Nadu or all over? Only in Chennai you have Amma canteen. All over Tamil Nadu you have this Amma canteen. Oh, then there might be huge rush, right? No. Why? Quality is bad. Who is that so? Average. Acha, okay, fine. It's getting recorded. Okay, if you say quality bad, I'll pan this camera to you. Okay. All right, whatever it is. Anyways, it's a good initiative. Okay. Anyways, it is a good initiative. Those who are actually starving make use of these kinds of things. I've seen hotels in Tamil Nadu, especially in Coimbatore. What is the name? Some Vijay Park or something. There's a hotel in Coimbatore naming Vijay Park. Whenever I move on to the classes during the morning time, there will be a long queue in front of that hotel. They always give parcels to the people. Just like beggars and all go over there and they collect the food from that particular hotel. Every day it is there. I normally wonder, like 1 day or 2 days, they give, okay, it's fine. They have some balanced food with them. That's why they have given. Every day they give. I can see that whenever I move on, I can see that there will be a long queue. Because people from different parts, I think they are coming. And they're giving these parcels to everyone. I have no tie-up with Vijay Park, okay? I don't even know who's the owner of Vijay Park. Okay, I'm not sure if I'm spelling it right. Vijay Park or something, that is the name. It's in Coimbatore. It's a big hotel comparatively. They're giving free food. I mean, yeah, I think it's free because I didn't see they're charging anything. They're simply giving this. People are collecting it and going and having this food from the street. Like, it's a fantastic thing. Yeah. So coming back to the point. So, where were we? Completely lost. Yeah. Expenditure on free meal in excess of 50 per meal shall be taxable perquisite to the extent of excess amount in the hands of all employees. Wonderful. Now, friends, moving on to the next one. In any other case, apart from these three, in any other case, actual expenditure to the employer minus amount charged from the employee shall be perquisite. In any other case, if the employer is giving a free food or charging something, then the net amount shall be taxable in the hands of the employees. Are you with me? Are you with me? Now, this is all about the free or concessional food and non-alcoholic beverages. So, KSA Cafe also cheap. Oh, is that so? Oh, yeah, I think 5 rupee or something for one idli or vada or something, right? Yes. That is also, Matupatti is a rural area. No, Attipatti. We have Attipatti da. Don't take Matupatti. Yes. Super. Now moving on, friends, moving on to the next one, that is next taxable perquisite, that is value of voucher or token in lieu of such gift. Listen. Value of gift voucher or token in lieu of such gift simply means, listen, employer have given a gift to the employee. Employer have given what? A gift to the employee. And if the value of any gift or a voucher or a token given to the employee or any member of his household on a ceremonial occasion or otherwise by the employer shall be taxable in the hands of all employees. That means, say, employee's son's birthday. employer attended and given a gift to the son. That gift shall be fully taxable in the hands of employee as a perquisite. Are you with me? Or simply one fine day, employer visited the employee's house and given a gift. That gift also shall be taxable in the hands of employee according to this perquisite valuation. That's what we have said. The value of any gift, voucher or a token given to the employee or in bracket or any member of his household, it is on account of either a ceremonial occasion or otherwise. Either simply or at the time of attending some function or something, it shall be fully taxable in the hands of all perquisite. But there is an exemption. How much is the exemption? However, gift voucher or token up to 5,000 in aggregate during the previous year shall be exempted. Gift voucher or token up to 5,000 in aggregate during the previous year shall be exempted. Are you with me? Are you with me? So all the gift vouchers, all the other things which is up to 5,000 shall be exempted. Now there is another confusion here also. What if the value of gift is 6,000? Fully taxable or excess taxable? The value of gift is 6,000. Fully taxable or excess taxable? Two views are there. Every institute question gives with an alternate view because the Income Tax Act, if you read, it's not clear. You can say either fully taxable or excess taxable. Just like that 1,000 rupees per child in the case of educational facilities. Similarly, here what you can say is, say if the value of gift is 6,000, either you can say full 6,000 taxable or 1,000 taxable. Are you with me? Are you with me? And there is one note. What is this note? If the employer gives cash, if he is giving money, then no benefit of 5,000, fully taxable. It should be other than cash. Don't give money or directly convertible money. Say for example, you're giving a check. That is also considered as money. Yes, you're giving a check, a cash check or an account pay check. That is also considered as money. You give a gold ring, no problem. But I don't know whether you will get a gold ring under 5,000. So no problem. Are you with me? Are you with me? Yes. The provision up to 5,000 that is written by MEDA. Okay. It's not the copy paste of Income Tax Act. I simply written up to 5,000. Yeah. So if the company conducts some function oriented games for children of the employee and gives voucher for a price of winners more than 5,000, no problem. Okay. But if it is only for the employees, yes. Only for the employees, yes. That have to be considered as a gift. It's a common program and the company's employees' sons also attended, then no problem. Moving on to the next item. We have two more main items before we have three things to salary. Okay, we have three things under salary before we solve a question in salary. So, yeah, we have time also. Now, moving on to the next one. This is another important perquisite valuation in this chapter. Okay, so please listen. Please listen. Use of movable assets. Are you all with me? Are you all with me? Use of movable assets. So there is a thing. And before that, yesterday I got some messages. Okay, so please listen, friends. Please listen. See, we have two set of books. Okay, we have actually two set of books. I think I've told you this yesterday. Number one is practice workbook. Practice workbook, as I've told you, we have all the past exam questions, answers, RTP, then study material questions, everything with answers, with amendment, with working note. Everything have been provided in this particular book, except one thing, that RFA. That RFA notification, because it came very late. So we have already completed the book and we have already started the publishing. So except that RFA thing, everything is included in this particular book, which is applicable for your September as well as January 2025. This can be used only for September and January 2025. You can see the attempt. I've written May or November. At that time, it was May or November. Then only institute changed it to September and January 25. So we have written May or November. Normally it is like that. We complete, this book is printed on normally November of 2023. Normally it is like that. We incorporate all the amendment. Then we will make the book ready. Only after that they change the attempt. But all the amendments have been incorporated in this. And plus we have one more book that is called as a handbook. Handbook is just a small extract of this book. That's what the revision notes. It's full of chart. 100% income tax is there. I haven't skipped anything. 100% of income tax is there in this particular book, including TDS, TCS, advanced tax, and all the topics are there, including notes, explanation, everything. It's a multicolor book with charts and tables. Okay, I don't know whether online friends can see this. So we have two set of books. This is actually available in our website. So you can scan this. You will directly launch. This is not a GPay scanner. Okay. So this is a scanner to easily access our website, Instagram channel, YouTube and all. So these things are available in the website and you will get a home delivery. Okay. And there is a price for that. That means this is actually not a part of the revision classes. Okay. I just informed you, we have these two set of books. That's it. You can visit the website, www.CA+B.CA. You can visit the website. This is it. It's there. So you visit the website and you scroll down, you can see the books. For CA Inter and CA Final, we have this. Okay, for CA Final also, we have two set of books, handbook multicolor. It's around 600 pages for CA Final because the institute study material itself for CA Final is around 2000 pages. So we have summarized everything into charts, tables, small things. There is no unnecessary explanation in this book. Everything is crisp and clear. Okay. And we have a workbook for CA Final also. So we have 4 set of books for Inter, 2, for Final, 2. It is available in the website and you give your mobile number, email ID, your postal address. We will send it from there. Yes. Yeah. So moving on to the next point, friends. Where were we? Use of movable assets. And again, for buying this, you don't have to text me, okay? For buying this, you don't have to text me. You can directly, it's just like buying goods from Flipkart, Amazon. We are also a e-commerce website. We have registered, we got a registration for the e-commerce website. We are also a registered e-commerce website. You can check the website and there is recorded classes, but recorded classes are only for Final, not for Inter. I'm not giving any recorded classes for Inter. We have recorded classes for Final as well as the books for Inter as well as Final. Yes. Now, price you can check from the website itself. Okay. Yes. So listen, where were we? Use of movable assets. Listen. This thing you have to be careful. Use of movable asset means what? A common sense. I've given an asset to you. I'm giving this, asset to you. Okay, I'm giving this asset to you. You can use it. Once you resign, you have to give it back to me. I'm not giving you the ownership. I'm only allowing you to use it. Are you with me? Are you with me? Let's understand how to value the requisite if I am giving you this particular asset for usage. So let's see. Use of movable assets. Let's understand how to make use of this. So asset given and value of benefit is also there. So friends, listen. What is the first asset? Use of. Hello, read it together. What is the first asset? Use of laptop and computers. I am giving you laptops and computers. You tell me, what will be the main purpose of giving you laptop and computers? Office usage. Yes or no? But irrespective of your usage, maybe you are watching some TV shows or watching some movies or surfing in internet, etc. in that laptop. No problem. Nothing shall be taxable. But I shouldn't transfer the ownership to you. Once you resign from the company, you have to submit that lap to the company. Most of the companies are doing that. Company have a tie-up with Lenovo normally. And they give this Lenovo laptops to the employees normally. Are you with me? Are you with me? Yes, so use of laptops and computers. And for that use, you don't have to pay any taxes. Even though you can use that laptop for your small personal needs, nothing shall be taxable. Then, what is the other one? Movable assets other than laptops and computers, and assets already specified. What is that? Do you remember motor car? Today only we have discussed the valuation of motor car, yes or no? I am giving you a motor car. You can use that particular motor car for your usage. Then we have already valued the perquisite. So I am giving you any assets other than motor car or laptop and computer. Say for example, washing machine, TV, etc., etc. Without looking at the chart, you tell me, how do you value the perquisite? 10% of the original cost of asset. If the asset is on higher, then the higher charges. Do you remember furnished accommodation yesterday? I have added this with the unfurnished accommodation and we made it furnished accommodation. Normally the examiner will ask a question like that because both are two different perquisites. Number one, rent-free accommodation. And we have included a thing called as furnished accommodation. Are you with me? Furniture means TV, washing machine, fridge, VCR, AC, then okay. So things like that have been provided at your home. Then how do you value that perquisite? If it is owned by the employer, take the original cost of the asset into 10% for a year. If it is taken on higher, then higher charges paid by the employer for a year. That's it. Is that clear? Is that clear? There is nothing. And there is a note under that, and can you read that particular note? Where the employee is paying any amount in respect of such asset, the amount so paid shall be deducted from the value of perquisite determined above. If you are collecting something from your employee, then that amount collected have to be deducted from the value of the perquisite. Are you all with me? Is that point clear? Excellent. So this is how you have to value the assets. Now let me ask you one doubt. This perquisite valuation was an asset given for usage. What if I am transferring the ownership? Then there is another perk valuation. That's what we are about to discuss. That is transfer of movable asset. Are you all with me? Are you all with me? So let's understand how to value the movable assets perquisite and all. So listen. So the transfer of movable assets, that is computer and electronic items, motor car is there, other asset is there. This is a little bit important and little bit technical, okay? This is important and a little bit technical as well. So please listen. Let's understand how to value the perk. So friends, let's start with the computer and electronic items. Are you all listening? Are you all listening? Let's start with computer and other electronic items. So, listen. Say for example, I'll create an example first of all. Okay, then we will stick on to the theory. I'll create an example, then we will stick on to the theory. So, say for example, employer purchased the laptop. Purchase the laptop having a value of say 1 lakh rupees. 1 lakh rupees was the value of laptop purchased by the employer. Are you all listening? Then he used it for 2 years. He used it for how many years? 2 years. Then on say on 3rd year, he transferred that to the employee for 10,000 rupees. For what value? 10,000 rupees. Let's straight away value the perquisite. Let's straight away value the perquisite. So if the asset transferred by the employer to the employee is either a computer or an electronic item, how do you value the perquisite? Let's understand. Very simple. To value the perquisite, you first take the actual cost of the asset. You tell me how much is the actual cost in our example? How much is the actual cost? 1 lakh. You first take that 1 lakh rupees incurred by the employer. Then what is step number 2? Less depreciation at 50% for every completed year under WDV method. Then you have to deduct what? Depreciation at what rate? At 50% for every completed year, and in what method? Under WDV method. Now let's understand how to claim that. So you have used it for 2 years. Yes or no? Yes or no? You have used it for 2 years. So if you're using it for 2 years, for year one, then how much is the depreciation that you have to deduct? 50%. That will be 50,000. And how much will be the WDV? 50,000. For year two, again, you have to deduct depreciation at 50%. And how much will be that? 25,000. And how much will be the WDV? 25,000. So this 25,000 is the value of the asset in year 3 or after year 2. Are you with me? So after year 2, if this 25,000 is the value, then you have to deduct what? Amount recovered from the employee. You tell me how much is the amount recovered from the employee according to our example? 10,000. So you deduct that 10,000 and how much is the remaining? 15,000. That 15,000 shall be the taxable value of perquisite. Are you all with me? Isn't it simple? These things are very simple, okay? Have we discussed any complicated thing? No, because the volume makes it tough. There are a lot of perquisites and lot of things to study. That volume makes it tough. You learn 2-3 times, okay? You read this 2-3 times, then you have to solve more number of problems. That some will actually save you an exam. Rather than by hearting the theory, you understand the theory. When you read income tax, you just go through the theory, understand the theory, grab the concept, then solve as many number of questions that you can. That is learning rather than by hearting this, because by hearting will never save you actually. You will definitely forget. And that too in question examination, they will come up with some kind of twisty adjustments. Are you with me? So it's not like by hearting theory. You should conceptually understand a theory. Then you have to apply the theory in the examination question. By solving more and more and more number of questions, you'll be able to crack the exam. Are you all with me? Only by understanding theory, it's not possible. Don't think like that. Most of the students are thinking like that. Say, we will learn all the theory. I'll by heart all the theory. Then I'll write the exam. It's not like that. Imagine a case where, say, you're by hearted everything. But in exam, what if they have twisted it and they have mixed it in a way that you're getting confused? Then it's gone. So you have to always practice examination questions. Okay, when you practice examination question, you have to open your theory book and read the theory. At that time, you will learn it in a different manner. You will understand a different aspect of the theory that you have learned. Are you all here? Okay, so let's complete the other things as well. And we were doing with the what was the value? Laptops and computers and electronic items. So that is the value of perquisite. Now, friends, listen. Moving on to the second one. What if it is a motor car? What if it is a motor car? Then how to value? You take the actual cost. Then less depreciation. But what is the rate? 20% for every completed year. Under which method? WDV method. Less amount recovered from the employee. If it is a motor car, then you take the actual cost first, then less depreciation at 20% for every completed year. Under which method? WDV method. Less amount recovered from the employee, and the remaining shall be the value of perquisite. It's actually similar to the laptop, but only one difference. In laptop, it is 50%. Yeah, fine. So listen. Say, Yes. So where were we? We were discussing about the transfer of movable asset. So actually the valuation is similar. Okay. The only difference is when it comes to a laptop, it is 50%, and when it comes to a motor car, it is 20%. That's it. Yes. What if employer giving during the year, depreciation for that year is available or not? If available, we provide proportionate depreciation. What are you talking about? You're talking about the employer's depreciation? No. It has no connection with the employer's depreciation. Okay. Employer's depreciation is under section 32, PGBP. This is just a method of valuation. Okay. This is just a PERC valuation method. What if the asset get transferred on 31st October 22, and how will the completed year be computed? Completed year is, what do you say, from date to date, 365 day. It's not financial year, it's not previous year, it's not calendar year, it's from day to day. Say you purchased on 1st November and transferred that on the 1st November of next year, then it is one completed year, like that. Okay, it's from day to day, 365 days you have to count. Because they are not saying PY, FY or calendar year. So year means 365 cycle. Yes. So listen, 10th October also completed year you count. Now, so moving on to the next one, other assets. What is other assets? Other than computer and electronic items and motor car. Now friends, there is a problem. Say fridge. It's an electronic item. Are you with me? Washing machine. It's an electronic item, but it is not valued under this bracket. Why? Because computer and electronic items, when you say, we use the ageism generis interpretation. Have you studied interpretation and interpretation statutes in your law paper? Ageism generis. What is ageism generis? If a common word comes after a specific word, the common word will take its meaning from the specific word. So here, electronic items comes after the computer. Computer and, it should be read computer and similar electronic items like computer. That should be the interpretation. Are you with me? So, what they are saying is, electronic gadgets include computer, digital diary, printers, but exclude washing machine, microwave, ovens, mixers, hot plates, ovens, etc. So, are you with me? So, don't include microwave, ovens, washing machine, fridge, mixers, hot plate, AC, like that. Computer and items similar to computer, like laptop, like a printer, scanner, UPS, etc. will come only under that particular bracket. That's it. Now, how about the other asset? Say fridge. What if a fridge has been transferred by the employer to the employee? Take the actual cost and less what? Depreciation at 10%. And what is the method for every completed year? But it is under SLM. Say for example, employer purchased the fridge worth 1 lakh. Employer purchased the fridge worth 1 lakh and transferred it to me after 2 years. Transferred it to me after 2 years and collected 10,000 rupees from me. And collected how much? 10,000 rupees from me. How do you value PERC? Year 1, 10% means 10,000. Year 2, 10% means, again, it is SLM right now. So another 10,000. And year 3, the value will be 80,000. And they have collected, say, 20,000 from me. Employer collected 20,000 from me. So you deduct that 20,000 and the remaining 60 shall be the taxable value of perquisite. Are you with me? Are you with me? So actual cost less depreciation and 10% for every completed year under SLM method, less amount recovered from the employee. You have the value of perquisite. Are you all with me? So 3 category of assets. We can divide that assets into 3 category. Which all are the 3 category? Number 1, computer and electronic items. Number 2, motor car. Number 3, other assets. Computer and electronic items, how do you value? Depreciation at 50%. And under which method? WDV method. For each completed year. Then you finally deduct the recoveries from the employee. And how about the motor car? actual cost minus depreciation at 20% or every completed year, less amount recovered. What about the other assets? Actual cost minus 10%, but depreciation under SLM method, and you deduct the recovery. This is how you value the perquisite, that is transfer of movable assets. This is the ownership, not usage. Are you with me? So by that we can say the perquisite valuation is actually important perquisites we have completed, and we have one more thing under this chapter, that is deductions from salary. So friends, listen. In examination question, how to solve the answer? Definitely there will be something in relation to salary. Definitely there will be something in relation to salary. Normally they may come up with a dedicated question. They may come up with a dedicated question which carries around 6 to 8 mark. Or the salary adjustment will come as a part of your computation of total income chapter. Or they will come up with some paragraph based MCQ. This is it. Apart from that, nothing will happen. Are you all with me? So this is it. If it is a paragraph based MCQ question, don't worry about MCQs. Why? A normal question that we solve in class will be given as a paragraph based MCQ. The only difference is you don't have to write any working notes. There won't be any one word twister and all. Normally institute never will come up with a one word and all. In income tax, they will never ask Income Tax Act dash. Option A 1961, option B 1972, option C 1973. Never expect such a kind of a question in income tax. It will be always a numerical thing. They will ask something, then they will give options. Are you with me? Most probably 90% of the MCQ questions will be a normal question only. So don't waste your time by solving all the MCQ booklets and all. Rather focus on the theory as well as on the descriptive. Just solve the RTP questions and MTP questions. RTP and MTP MCQs is more than enough. If you really think that you want more, then go for that. In the BOS portal, there is a thing called MCQ, what do you call it? MCQ practice. You do the answers over there. It's, I think, an online thing, right? It's an online thing. They will create a question, you can give the answer, and you will get the marks after each session or something. Are you with me? Do that, but don't spend a lot of time on that also. It is just to get an idea. And one more thing. In examination, from where do you always start? Where should you start? Either with MCQ or descriptive? Descriptive. Don't start with MCQ, because MCQ is a kind of a villain. It's a kind of an either everything or nothing. It's a kind of do or die. If it is right, you will get full marks. If it is wrong, gone. But descriptive, you have written something, you will get step marks. So in my opinion, what I will say to my students is always start with the descriptive. Start with the descriptive, both DT and IDT, you start with the descriptive. Then say, take 4:15 as a cutoff time. 4:15. Your examination is from 2 to 5. You will get the question paper on 1:45. I think it's like that, right? That cool off time. Yes or no? That is the, tensing time rather than cool off time. We can say tension time. So that 15 minutes, you plan everything. Okay. That 15 minutes, you select the descriptive questions that you want to solve. Then always start with the descriptive questions. Say 4:15 should be a cutoff time. 4:15, whether you have completed the descriptive or not, you should start MCQ. Are you with me? 4:50, not 4:15, 1-5. On 4:15, you have to start with the MCQ and stop the descriptive at that time. Then you go through the MCQ. Certain MCQ, when you read itself, you will not understand anything. Leave that. Because in examination, you have to take a call. Don't get tensed. Leave that. And read the other one. Certain MCQ, certain questions like a descriptive question, ditto, copy paste will come in MCQ. Those things you solve and get the answer. So you tick and all. Then what you have to do is, you have to solve the other remaining descriptive. Then on 4:50 or 4:55, you have that bell. There will be some warning bell will come. But that warning is for you to complete the other MCQ that you left. Ingi, pingi, pongi, father has a dongi. Everything put like that. Okay. Whatever you can put like that. Or there is something else rather than ingi, pingi. Then what is that? One more thing is there. Very famous thing. Akkad mukkada. What is that? Akkad mukkada, ikkada pakkadaya. whatever you like, you do that. Okay. Ingi pingi, akkadu mukkada, ikkadu pakkadeya. Do whatever you like. All right. So don't do that stupid thing. Okay. That piece of paper you take, then you, and you're checking which part of the answer that paper falls on. Appadi ellam pannade. Okay. So you have only 5 minutes. You have only 5 minutes. Then, because you don't have any negatives. You don't have any negatives. You try to read the answer. You're not getting it. Simply take it. Are you with me? Because MCQ, don't waste your time. Our objective is to pass the exam. Clear the exam. Rather than scoring 15 out of 15 in MCQ, you should clear the exam. Are you with me? That 3 hours is actually very important. That 3 hours is actually very important because it's your preparation, your 9 months or 10 months preparation or 1 year's preparation, you are converting it into, whatever it is, don't worry. You are converting that preparation into answers to get marks, that too under 3 hours. So that 3 hours is everything. Are you with me? You should prove that you know things. So, yes, it is unfortunate, but it is always like that. Okay. So, what you need to do, you should consider that 3 hours very valuable. Always start with the descriptive because our aim is to clear the exam, nothing else. Okay. Whether it is descriptive, whether it is MCQ, whatever it is, you only should get marks. Coming back to the point, friends, 3 deductions are there. Which all are the deductions? We will quickly complete the deductions. Which all are the deductions? The fun thing is there. Akkad, bakkad, bambe, bo, 80, 90, pure 100 mein laga, dhaga, chor, nikal ke, bhaga. My God, enna level dedication, Chaitra. Okay. I used to ingi pingi during costing MCQ. Day. But yella pannade, okay. They vilayattukku tha sonne. Don't take it seriously, okay. Is this rule applicable for furniture? The ingi pingiya. Furniture used by employee. Yes. It is applicable for furniture used by employee also. Yes. Yeah. So coming back to the point, friends, listen. You have 3 set of deductions, and number 1, standard deduction under section 16(1)(a). So what is standard deduction? Either 50,000 or gross salary, whichever is lower. Listen. See, salary have different components. Allowances is there, gratuity is there, pension is there, then leave salary is there, then retrenchment compensation is there, then voluntary retirement is there, perquisites are there, bonus is there, DA is there, commission is there. You have to add everything first. If something is exempted, you adjust that exemption, then RPF, PPF, SPF thing. Something is exempted, you adjust that exemption, then you compute the gross salary first. Are you with me? From the gross salary, the first deduction that you should claim is what? Standard deduction. And how much is standard deduction? Either 50,000 or amount of gross salary, whichever is lower. That means if your gross salary is 40,000, don't claim 50,000 as standard deduction and don't say that it's a loss. Because in salary head, you will never end up in loss. Are you with me? Are you with me? So what department says? Standard deduction of 50,000 or amount of salary, whichever is lower shall be the deduction. Then what is the second deduction? Deduction for entertainment allowance. If you are a government employee and you are getting entertainment allowance, you can claim a deduction for that entertainment allowance that you got. Are you with me? If you are a government employee and you are getting an entertainment allowance, you can claim a deduction for the entertainment allowance that you got. What if you are a private employee and getting an entertainment allowance? Say you are a private employee and getting an entertainment allowance, then it shall be fully taxable. Only government employee. Government employee simply means state and center. Now moving on. How much is the deduction, friends? It shall be lower off. Which are the limits? 1/5 of your basic salary. So you take your basic salary into 1/5, or rather we can say basic salary into 20%. 1/5 is 20%. So either 20% is the basic salary or 1/5 of basic salary. Then what is the second limit? 5,000 rupees. What is the third limit? Actual entertainment allowance received, whichever is lower. So very simple, either actual entertainment allowance received or 20% of the basic salary or 5,000 not per month. It is for a year. 5,000 rupees, whichever is lower, shall be the deduction for the entertainment allowance, provided you are dash government employee. Very good. And what is the third one? Professional tax under section 16, clause number 3. So different state charges professional tax according to their wish. Whatever professional tax that you paid is allowed as a deduction only when it is actually paid by the employer during the previous year. So the professional tax paid by you also can be allowed as a deduction. 3 deductions from gross salary. Which will are the 3 deductions? Standard deduction, entertainment allowance, professional tax paid. Are you all with me? Are you all with me? Now there is one more thing that you should know. Say, listen. Say my professional tax is 2,000 rupees. Okay. Say my professional tax is 2,000 rupees. Say 1,000 paid by employer. 1,000 paid by employer. Okay. 1,000 is paid by whom? Employer. And 1,000 is paid by me. Me means employee. Okay. In that case, what to do? I'm supposed to pay 1,000 from my pocket. Yes or no? Sorry, not 1,000. I'm supposed to pay 2,000 from my pocket because that is my liability. But my employer have paid 1,000 for me. Yes or no? I'm supposed to pay how much? 2,000. But my employer have paid how much? 1,000 for me. You tell me. That will become my taxable perquisite. Are you with me? That will definitely become my taxable perquisite, and you have to treat this as a perquisite. Are you all with me? Now, after you compute your gross salary, from the gross salary you deduct that entire 2,000 rupees as what? Deduction. 2,000 means 1,000 paid by you and 1,000 paid by employer. That simply means that employer 1,000 will be added as a perquisite and you can claim as a deduction. Even though you didn't do that, you will get the same numerical, but you will not get marks. Are you with me? Because your gross salary will go wrong, your deduction also will go wrong. If the employer is suffering a portion of or the complete professional tax, you add it as a perk. Then you deduct the same amount as a deduction from professional tax. If some part is paid by him, add that part as perk and deduct the entire professional tax paid by you and your employer as a deduction from the gross salary. Is that clear? No, there is no limit actually, because different states charges different amount. It can be 2,000, 2,500, 3,000, depends upon the state. The state have the authority to levy professional taxes. Normally it is around 2,000, 2,500 and all. Yes, that's it. By this we can say our salary theory is over. Paid by me 5,000, then you can claim that 5,000. Okay. If it is paid by you as 5,000, then you can claim that 5,000. No problem. Yeah. So the theory is completely over. Now we have what? We have some questions. So you need a break right now or? Paid by employee? No need to add it as a part of salary. Okay, paid by employee, don't need to add. You said you don't want a break, right? Want a break, huh? Okay, so do one thing, go relax and come by 11:15. 20 minutes, that's more than enough. Okay, 20 minutes break.